If you made any money from freelancing, driving for Uber, selling on Etsy, or any other side hustle, the IRS considers you self-employed, even if it's just $500. That comes with a whole separate set of tax rules that most people don't discover until they get a surprise bill. This video covers everything you need to know before tax season hits. The threshold for reporting self-employment income is $400, not $600, not $1,000. If your net side hustle earnings exceed $400 in a year, you must file a Schedule C with your tax return. Many people assume they only need a 1099 form to report income. That's wrong. Even if a client pays you $300 cash with no paperwork, you're legally required to report it. And starting in 2024, payment apps like Venmo, PayPal, and Cash App must report transactions over $600 to the IRS. Here's the biggest surprise for new side hustlers: self-employment tax. When you work for an employer, they pay half of your Social Security and Medicare taxes. When you're self-employed, you pay both halves, a total of 15.3% on your net earnings, on top of your regular income tax rate. On $20,000 in side hustle profit, that's $3,060 in self-employment tax alone, plus your marginal income tax rate on top of that. Because no employer withholds taxes from your side income, you must pay quarterly estimated taxes yourself. The 2026 deadlines are April 15th, June 16th, September 15th, and January 15th, 2027. Missing a deadline triggers an underpayment penalty. To calculate what to pay, estimate your annual self-employment profit, calculate 15.3% for a SEP tax plus your expected income tax, add them up, divide by 4, and pay that amount each quarter. The good news: self-employed people get powerful deductions that employees don't. Every legitimate business expense reduces your taxable profit. Common deductions include business equipment and software, home office, if you use a dedicated space regularly and exclusively for business, vehicle mileage at 67 cents per mile in 2026, business portion of your phone and internet, professional development, and health insurance premiums if you're self-employed. The most powerful tax strategy for high-earning side hustlers, a SEP-IRA or solo 401k. With SEP-IRA, you can contribute up to 25% of net self-employment income, up to $69,000 in 2026. A solo 401k lets you contribute as both employee and employer, up to $23,500 as employee, plus 25% of net income as employer, for a combined limit of $70,000 in 2026. These contributions are fully deductible and reduce your self-employment taxable income directly. Your action step: open a separate bank account for your side hustle immediately. Track all income and expenses from day one. Set aside 25 to 30% of every payment for taxes. And consider consulting a CPA if your side income tops $15,000, the deductions alone could save you more than their fee. Subscribe to Everyday Wealth Guide for more self-employment finance tips every week.